Hello and welcome to your Daily 5. My name's Erin Swenlin with DecisionPoint.com, and I'm going to show you the 5 charts that I think you need to look at and know before we go into this week of trading. It's going to be an interesting one so far that I can tell. Let's go ahead and get started. 5-month candlestick chart. So let's start with the SPY. All right, so it was an interesting week last week. We had this big gap up that happened on Thursday, because that's what popped this bar right up here. We broke out from this bullish falling wedge, which was the expectation of the pattern and was our expectation as well. And then we saw another gap up. And when I saw that gap on Friday afternoon, I got the sense that it might be an exhaustion gap that we had just put in. It doesn't look like it's going to be an exhaustion gap necessarily. It's possibly a reverse island, but more than likely what we're going to be looking at is prices moving mostly sideways going into this week. And that seems to be what we're seeing right now with that candlestick. At this point, this morning here on the East Coast, we do have what looks like a bullish engulfing candlestick that is starting, where the body is getting ready to engulf the candlestick before. So if we get a bullish engulfing on top of this rally that we have, then we might see some higher prices. But our sense is that we kind of got the last gasp last Friday moving into this week. And why is that? One of the reasons is the VIX. We invert our VIX so that overbought is on the top, oversold is on the bottom. Whenever you get the VIX really close to the upper Bollinger Band, or you see it puncture that upper Bollinger Band, typically that is a high sign for you to know that you're more than likely going to see a move downward in the next day or two. Things have gotten overbought on that VIX. So our expectation on Friday was to see prices start to turn down, or since we did have this very strong rally, that what we could see, as I mentioned earlier, would be consolidation or a move sideways. The Swenlin trading oscillators, these are very short-term, well, they're our short-term indicators. And they've been setting up a negative divergence right now with price tops. So we have these rising price tops, but the Swenlin trading oscillators are showing a negative divergence. On the bright side, the Swenlin oscillators are moving higher, which is another sign to me that we will see a little bit more of this sideways consolidation. I think kind of worst case is going to be this is a reverse island, and maybe we get a gap down tomorrow and see this straight up rally right here dissipate and move back down onto this rising trend line right here. We can also see, as far as participation in our stocks above their 20-day EMA and the PMO rising, we can see that we have pretty good participation right now in the S&P. And this is what you need in order to sustain or fuel a rally. So we do have the underlying good news, if you will, with participation. And then also, and I didn't point it out on our 5-month, but you do see that we have this positive PMO crossover buy signal. So we have some negative things like negative divergences showing up on our charts, but it's accompanied by mostly positive indicators, which is why, like I said, we're thinking we're really going to see some chop this week, some churn, probably not too much, more directionless than showing a rising trend or a declining trend. Let's look at the climax analysis. We did end up having one climax day, on Friday. On Thursday. And Friday's move, we felt punctuated climax day. Now, when the climax came in, and we measure a climax day based on volume ratios. So when the NYSE and SPX up-down volume ratio is above our threshold of 3, that alerts us that we have a climax day. And what we have to do next is determine if it is an upside initiation climax, or is it an upside exhaustion climax? It was actually very tricky on Friday. Carl and I had to talk about it. We weren't fully in agreement as to what kind of climax day it was. So My thought had been, okay, maybe it is an initiation to higher prices because it is coming off of a declining trend here in the short term. But as Carl pointed out, it's also this climax day came in 8 days after the bottom that was put in earlier in the month. So in his mind, it was an exhaustion. So we discussed it, and I had to say I would go along with him because of the VIX being very close to that upper Bollinger Band. And that generally tells you you're going to see a short-term turn to the downside. So we went ahead, we called it an upside exhaustion, meaning that we should expect to see lower prices in the next day or two, or at worst, at best, you would see price moving mostly sideways. Well, like I said, this was accompanied by a lot of other positive indicators. So my thought had been on Friday, after we got this move up, that move up was really punctuating the end of the exhaustion climax, basically the end of what it's telling us. So we still are expecting prices to move down. This was just, if you will, a continuation of that exhaustion climax. So we told all of our readers that you should be, staying cautious. Everything looks really good. So we're really not expecting a huge decline. If we were to get a pretty big decline, we still have some really good support landing here. And I'm starting to see what could be a possible reverse head and shoulders off of this decline from the all-time highs. You can see a left shoulder here on the reverse head and shoulders. There's your head, there's the right shoulder. Reverse head and shoulders, of course, are bullish formations. So we have a lot of mixed messages here, but the fact that the indicators in general are posting very bullish readings, we're feeling pretty good about the market going into this week. Like I said, we may have some churn and chop, but we're not as concerned about a big decline happening, at least in the first part of this week. The sector to watch is real estate. What we noticed about all of the sectors on Friday is that we're getting positive momentum coming in on all of them, just about, and the picture is changing. It tells us that the base of what's going on right now, there's a lot of stocks because there are a lot of sectors that are showing new momentum or even positive crossovers. And that's what we're seeing on real estate. So what we do is we have these, what we call under the hood indicators on the sectors. And we also have it on gold miners, but we'll get to that next. And you can see that with real estate, we have this really nice cup shape. We're getting a little bit of a handle right now. Certainly price is higher at this point, but we have a lower high. And then we have that brand new PMO crossover buy signal. But is that enough? That's why we have these under the hood indicators. So the OBV is confirming it. We have rising bottoms on the OBV. The Silver Cross Index, this measures how many stocks within the real estate sector, in this case, have a 20-day EMA above the 50-day EMA. Because when you have that, you have a nice intermediate term bullish bias. So we want as many stocks within that sector to be to have a silver cross. That's what we call that. So of all of the stocks within an XLRE, we do see about 62% of them with a 20-day EMA above their 50. And then additionally, it's growing. We have the positive crossover and it's moving higher. If you look at some of our other sector charts, and our subscribers can look at the sector charts exactly as you're seeing them right here, that's exclusive for our subscribers to either the DP Alert or the Decision Point Diamonds. And so we look at these beneath the surface, and I can tell you that on the other sectors, that most of those silver crosses are moving sideways. They are starting to bottom, but we're really not seeing a rising trend on them yet, which is why I picked real estate as the sector to watch this week. The BPI is kind of moving sideways, so it's not giving us a whole lot of information here. But let's look at the participation. The stocks above their 20-day EMA and stocks that are above their 50-day EMA is rising strongly. And best is that they are not completely overbought at this point. We still have room for expansion. We have room to bring more of these real estate stocks in and to see that Silver Cross Index move even higher. Now, obviously the Golden Cross Index, and this measures how many stocks have their 50-day EMA above their 200, that's 100%. But you can see what's happened with this sector. You had a 50 well above the 200-day EMA, and even as it pulled back, it didn't really get close to even, testing that 200-day EMA. And all of the stocks are going to look very similar within this sector. So that's what's going on there. We're not going to see that Golden Cross compromised until we have price stay below that 200-day EMA for an extended period of time, because it needs to bring those 50-day EMAs below those 200-day EMAs. And with this kind of margin, it will take a very long time. So overbought territory, yes, we have a lot of these indicators moving into overbought. But as you can see, when price is moving strongly to the upside, those overbought conditions can persist for quite a while. So we like what's going on with real estate. In fact, if you really want to look in here, you can see a double bottom. And with the breakout here above that confirmation line here in this thumbnail, that tells you that the pattern has been executed, and we should see prices come up and test some of these all-time highs for XLRE. So the solar ETF, going to a totally different place right now, is looking pretty good. And this was one I brought to my subscribers a while back. I brought it to them on, I believe, the breakout here from the bullish falling wedge. Since then, I think the picture is only brightened. We've got the 20-day EMA moving above the 50-day EMA. That's a silver cross, like I was talking about before. We have an RSI that is positive and not overbought. We also can see that the on-balance volume is moving upward with price, those price bottoms. And then finally, you can look at the comparison and the relative performance against the SPY for the solar ETF TAN. And you can see that overall, we're getting rising numbers here on relative strength. So currently it has been outperforming. You can see at the end of the week, it got a little bit dicey here as price started to consolidate that giant rally upward. Now we're forming a bullish flag formation. If we get the breakout here, the expectation is a move the height of this flagpole, which will certainly bring it above this area of overhead resistance and could also bring it up to test this area of overhead resistance if we get that breakout and we see that continuation. But I think solar is poised to do well going into this week still. We will want to watch it and see if this flag is it's developing, but is it going to actually execute? You'll notice I have this 6.8% listed in here. Whenever I show my decision point diamonds a stock pick, I always include a stop level. And so you can see right here that I've set that stop just below the 200-day EMA. That's all I have for you today. And, one of the sectors and industry groups I also would recommend watching is gold miners. I talked about this not this last Friday, but the Friday before in an interview, that we were going to see a move in gold miners to the upside. We're seeing that. We're getting very similar action, just like the TAN ETF, where we're seeing a little bit of consolidation right now, but I think gold miners still look great to break out. That's all I have for your Daily 5, and thank you very much for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.